Thursday, April 25th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about a subject that I talked about a lot in the run-up to the EU referendum in 2016 in my videos, and it is the subject that Brexit is a huge distraction. It's like the powers that be putting the spotlight somewhere else in order to keep people from looking into the real problem in the country, in the UK, also in other countries, I would argue, in the Western world, and that is the subject of debt, the debt that the public had to take on in 2008, 2009 to bail out a few city traders, speculators, banks, just a few thousand people, maybe not even, at the expense of millions of people. And yeah, don't get me wrong, I think it would be a good thing for the UK to leave the EU. And why do I say that? Well, that would be one less layer of government. I'll talk about why I think it's a big distraction in a minute, of course, before I look at where the markets are going. So it's just before 8 a.m. London. Yesterday, stock markets came off. The Dow was down 60. S&P down about 6, NASDAQ composite down about just under 20 points. So they're all down about 0.25%, just under 0.25%. So not huge moves down. So this morning we've got spot gold at 1276.50, up $1. Range has been 1273 to 1277. Silver rallied fairly well yesterday afternoon. Right now we're at 1492, so down about 2 cents. Range has been 1498 to 1486. The Dow this morning, the Dow future is down 54 or 0.2%. S&P though is up 2.7 points at 2930, and NASDAQ 100 is actually up 0.75%. I think there's some results from Facebook yesterday. It's up about 6.8%. So that's what is moving the NASDAQ higher. Looking at the charts here of the stock markets, it looks like the S&P might be losing momentum. Looked at these rising wedges the other day. I know that we closed at an all-time high in the S&P a couple of days ago, a closing all-time high, but it actually hasn't broken out from the intraday highs in September last year. So, and as you can see here on the weekly chart, it looks like it might be losing momentum, but we'll have to see, of course. These markets are, in my opinion, fairly irrational right now. So let's get back to the markets. Currencies. Yeah, the dollar has been fairly strong. The pound right now is up about 5 pips or marginally. It's just above 129, 129.07, but it has been as low as 128.88. So the pound not doing too well. Euro 111.60. That's unchanged as well. The dollar's down 1/3% against the yen, 111.86, and up slightly against the Chinese yuan at 673.54. Crude oil is up 0.25%. WTI just under $66. That's up 15 cents, and Brent is up 33 cents at 74.19. I've noticed that the yield curve and yields have dropped quite a bit this week. I think we started out the week around 260, 261, and right now we're down to right 252 in the 10-year. That's quite a significant move, even though we haven't really seen a huge correction in the stock market. And I've noticed as well that the 3-month to 7-year spread, the yield spread, is now gone negative 2 basis points. Remember that I talked about the fact that in the last week we'd seen the curve disinvert and actually slope upwards, which would be a positive sign for the economy. But it looks like now it's just going back to inverting again. We'll have to keep an eye on that. The other thing I noticed, emerging markets are not doing great. I saw the Brazilian real, the dollar traded up to 4, which is quite an important level. So we've seen the Turkish lira under pressure this morning. It's the dollar is up almost another 0.5%. It's almost back up to 6, the dollar versus the Turkish lira. Brazilian currency right now is not trading at the moment, but yeah, it closed at 4. So we need to keep an eye on that. And that's in spite of the fact that central banks, and the Fed included, have gone to an accommodative mode. Usually emerging markets have problems when central banks like the Fed start raising rates and being tighter, and we're not seeing that. So we need to keep an eye on that. So what about Brexit? Yeah, I made a lot of videos back in 2006 and even probably last year a little bit, that I think Brexit is a big distraction. I think the powers that be actually are using it as a tool to keep the public divided, of course, Brexiteers and Remainers, and not looking at the real problem in the economy, which is debt. Not only government debt, but corporate debt and household debt. Huge problem in the UK. And one of the reasons I'm talking about that today is that I saw this article on Zero Hedge. UK borrowing surpasses most other countries. Net borrowing, lending as share of GDP in selected countries. So you can see there the UK is minus 5%. You see there, that's what's going on here. And I've spoken about the fact as well that ever since the 08 crisis, just before it kicked off, you could with £1 get over $2. That was the high around in 2007, was $2.11. And after the crisis, at the height of the crisis, the pound collapsed to like 135. And then over the years after the crisis, it rallied back up to like 172. That was, I think, in 2014. And then it started dropping, even before the referendum was called. And I think we were around 155 or 150 when the referendum was called. So what we're seeing in the UK is a gradual debasement of the currency, because the powers that be, monetary authorities, they know that the UK cannot survive and pay off its debts with a currency that is stable. So what are they doing? They're basically debasing the currency. They're just printing, inflating away, even though they keep telling people that there is no inflation. I mean, I've noticed this year, apparently, the minimum wage in the UK is gone up by almost 5%. And am I saying here that the minimum wage causes inflation? No, it's the policy of running huge deficits in the UK, the government debt increasing. That's what, government spending. That's, the zero interest rates basically by the Bank of England. That's what causes the rising cost of living. And I was surprised to learn that the minimum wage went up by just under 5%. Which is very generous by the government. And I think they see that the problems are arising, the economic problems. People are not coping, unless, of course, you are an executive in the City of London, you are near government, you are in the military industrial complex in the UK. There is a small one, arms, sector, I would say. If you're a politician, a consultant, if you work for the BBC, all those things, you're doing fine, and you don't see what the general public is going through. But Brexit will be, if things get worse, it will all be put on Brexit. And my argument that it should all be put on the bailouts of '08, when the Gordon Brown government and under Alistair Darling as Chancellor had to bail out the banking system because everything, the banks here were going to implode. Maybe like in the U.S., things weren't going to be that bad for Main Street, but probably would be because the housing market was collapsing as well. So they brought that back. I think the pound is going to continue to weaken over the long term, and that's why I hold on to my gold. As a UK resident, I think it's a great way to hedge against the debasement of the pound against the dollar. And I think the dollar is going to go down against gold as well. So it's going to be a double whammy. I personally, add on to my gold positions or physical silver positions as much as I can. Of course, it's hard in this day and age to be able to have extra fee at the end of the month. I use gold investments in London, in the city of London. They're arguably one of the oldest bullion dealers in the city of London. And you can even get a 0.5% discount by using maneco 64 promo code when you call them to deal. And I've dealt with them for over 15 years, so they're a reputable family business. Anyway, back to Brexit as a distraction. Well, I remember back around 2010, 2011, when the new government came into power after the Labour government lost the elections. We had a conservative Liberal Democrat coalition with George Osborne as the Chancellor of the Exchequer, which is the equivalent of the Treasury Secretary in the US. He was saying that they're going to balance the budget by 2015. UK ran huge budget deficits during the crisis of '08 and thereafter. But here we are now, 2019, going on to 2020, and I can tell you that the UK's budget deficit is still 1.6%. That's what the Economist says here. Latest number, 1.6% budget deficit. And we know that these so-called economic recoveries, which in my opinion are phony, they're long in the tooth anyway, officially, as per government measurements. And once the UK goes into a recession again, which I think could be fairly close, this deficit is going to increase again. They're never going to balance this budget deficit. And some of you might have seen some of my videos about the GDP and the fact that government spending is calculated as GDP, believe it or not. So countries that run big deficits, budget deficits, government budget deficits, like the US and the UK, their GDP looks artificially stronger. It's only because government is adding on to that because they're spending more than they take in. They're, like you could argue that 1.6 deficit of GDP that the UK is running. If they ran a balanced budget of zero, GDP in the UK here, or Britain, according to the Economist, is 1.4%. So if we had a balanced budget, this GDP would actually be a negative number. So yeah, Brexit is important. It has created uncertainty, but in the end of the day, the problem for the UK is the debt. And the way they're going to solve it, they've solved it. It's the way they've been solving it for time immemorial under the fiat currency central banking system, and that's by decreasing the value of the currency, which is basically inflation and rising prices. So yeah, don't Don't let them fool you into thinking that it was because of Brexit and because of Brexiteers or Remainers creating the uncertainty. No, it's got nothing to do with that. It's got to do with the monetary system, with the banking system, the fractional reserve banking system, based on thin air, and the fact that this country has given up sound money for many, many, many years, since 1931, I would guess. If you enjoyed this video, make sure you hit the like button. Make sure you share it far and wide as well with people that you think might enjoy the content and might need to know about this as well. If you haven't subscribed to the channel yet, think about subscribing. Make sure you also hit the little notification bell above to be notified of all my new videos. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.